Hello friends, welcome to Business Learnings. In this video, we will talk about IndusInd Bank. In today's trading session, it rallied for 25%, reached almost close to 400 rupees. Still, if you compare it from its all-time high, it's down by a significant amount, 70-80% down. Should you buy it or should you just wait for it to fall more? Is it a good stock? We will discuss these kinds of things. And yes, let's start the video. First, I'll discuss the negatives of the bank, and then I have made a list of positives as well. So first negative is the asset quality divergence. See, every bank has to give out some loans, right? It raises money, raises deposits, and it gives out loans. Now, the percentage of loans that may go bad, which means the percentage of loans which cannot be recovered by a bank, they have to be identified as and when the bank could recognize it, right? But some banks do not do so. Why? Because they want their profit and loss statement to look nicer. That's why they keep on delaying the identification. And this was the problem with IndusInd Bank. It did not correctly identify those bad loans. For the past 4 or 5 years, there has been several instances where RBI has detected that IndusInd Bank is not disclosing its bad loans properly. So this is a big negative news. Why? Because it raises some questions about corporate governance, right? So this is the first negative. Second is the CASA ratio. CASA is current and savings account, and from 42.4% in the last quarter, it has come down to 40.5%. What does CASA ratio mean? How does it impact? I'll tell you. See, if a bank has a high CASA ratio, it means the money that the bank has in terms of current and savings account is quite high. And this is a positive sign if a bank has a high CASA ratio. Why? Because you do not get a lot of interest on savings account. You get 5-6% in fixed deposits, 6% in fixed deposits, while in savings account you just get 3%. So bank just has to pay 3% interest on savings account. That's why more the number of savings account, cheaper it is for banks to maintain it, right? And that's why a high CASA ratio is favored. But for IndusInd Bank, this ratio is consistently going down, which is a negative news. Third is the exposure, bad loans again. The ILNFS and telecom, it has exposure to Vodafone Idea and ILNFS. And if Vodafone Idea goes down, about 3,000 crore rupees will go down with it, which was lent by IndusInd Bank. Other banks also lend some money, but for IndusInd Bank, this money is 3,000 crore rupees. I highly doubt if Vodafone Idea will go down. I do not think that government of India will let that happen, but if that happens, that's a bad news as well. Now is yes, it's similarity to Yes Bank, and this is a psychological factor. Yes Bank followed a similar pattern. It had a huge exposure in corporate sector. The CEO Rana Kapoor's term was close to its end, and it got over quickly. And similar, you can draw some analogy of Yes Bank. Again, high corporate exposure in IndusInd Bank. Romesh Sobti, the CEO, who was the CEO for quite some time, his term was over and then he was replaced. So people are drawing conclusions that, as well as the divergences, RBI detected some divergences in terms of the asset quality. So all these things were very close to how Yes Bank was behaving in past couple of quarters. That's why people thought that maybe IndusInd Bank is the next Yes Bank, and that's why they started selling off in panic. But let me tell you, this is purely a psychological factor as per my understanding. Okay. Next is the microfinance loans. 10% of the total loans are microfinance loans, and these are mostly unsecuritized loans, uncollateralized loans. So if they default, these people default, these small corporates default, then you do not have, IndusInd Bank does not have any collateral to sell and get back. So these are all the negative things. One more negative thing is the amount of net non-performing assets. 2.19% gross NPA and net NPA 1.12%. I would say huge number. Less than 1% should be your NPAs, gross NPA, ideally. But for IndusInd Bank, it's double than that. So a negative news. Now we talked a lot about the negative things. Let's just talk about the positive things now. First is they are focusing a lot on retail loans. And let me tell you, if a bank is focusing a lot on the retail loans, this bank is going to survive in long run. Why? Because retail people, they do not default as much as corporates. We have already seen the example in Yes Bank, in many other corporate banks, right? We have seen that ICICI Bank, HDFC Bank, they are flourishing. And the banks which have high exposure in corporate lending, they are in deep issue. Positive news. Second is, I would say it is probably the most important thing. This bank, IndusInd Bank, is backed by Hinduja Group. Hinduja Group established IndusInd Bank 20-30 years ago. It has a 15% stake and it is looking to increase its stake. It means that first, IndusInd Bank has Hinduja Group has a long track record of good corporate governance. Second, the fact that Hinduja Group wants to increase its exposure, increase its allocation in IndusInd Bank means that the promoters believe in that group, and that is a positive news. Third is the PE ratio is less than 6. You know, industry PE for all these kinds of banks is close to 20, 25, probably more than that. And for IndusInd Banks, less than 6. The price to book value is just close to 1. Right? This is a huge positive thing. Now, net advances jumped by 13% as compared to the last quarter, and which means the loan book grew by 13%, which is a good thing. And most of it is coming from the retail sector. That is a bigger positive thing, right? Now, yes, we have covered everything. Yeah, shareholding pattern. Foreign institutional investors have more than 50%, approximately 55% of the total shareholding. Retail investors have just 6% of the total stake. One more thing that you should always remember: if a firm has consistently seeing an increase in the foreign institutional investor holding, it means the firm will do good in future, because those people do a lot of research before investing. And if a firm is seeing a constant downtrend in terms of the shareholding, in terms of the number of shares held by common public, the retail investors, the bank is going to perform good if the retail share is losing ground. Because in a good market situation, retail investors always lose money. I do not want to say that, but it has been the trend. So yes, this is it about IndusInd Bank. If you ask me about the verdict, I would say that this is a great opportunity to buy. Remember that please do not make your investment decisions based on my recommendation. Do your own research, consult your investment advisor before before taking any investment decisions. Please subscribe to support my work. I hope this video was helpful for you. Thanks a lot for watching. See you in the next video tomorrow. Thank you.